Hey everybody, I hope everyone is doing well and had a good day. This video, I'm going to do a brief recap of the Emini 5-minute chart from Monday, May 5th, 2025. I want to keep it brief. I want to show an example of how I mark up the chart, and I might just continue this format for these video reviews rather than trying to go bar by bar. It's more efficient for me. I can take 10 or 15 minutes to go through it this way. You can get an example of, like I said, how I mark up the chart. And it still gives me time to work on my other things because I like posting and I like knowing that my videos are helpful. And so I apologize for the break I took, but I should be back soon, if not now, starting with this one. So we'll get right into it. You can see I kept some of the bars to the left from yesterday. And when I say yesterday, if today is Monday, I'm talking about the prior trading day. So yesterday, in this case, is Friday. So we have some bars from Friday, thought they were important. So I want to keep those here. And I also want to mention something about day structure before I get into breaking down what I saw today. And this is 100% credit to Ali. He did outstanding work in his breakouts white paper. And in one part of it, he talks about a day structure research he conducted before he did his breakout study. And what he found was 86% of the days in any month have at least 4 hours of trading range price action. And 65% of days have trending trading range all day. And so what that means is only 10 to 15% of days are trends or channels that last all day, and only 5% of days are small pullback trends that last all day long. That's the first thing I want to cover because I think it's important to keep that in mind. Because it's easy to think we might have a trend day all day long, but the reality is that this is not, well, first, it's not a small pullback trend. We have about maybe an 8-bar pullback here, fairly shallow, but 8 bars here, maybe 10 bars, fairly deep. And to me, this does not classify as a small pullback trend. It's certainly a channel. We're getting higher highs and higher lows, but it is not a small pullback trend. And as far as this lasting all day, it may have lasted all day, but let's see what happens at key support and resistance levels. So in a bull trend, the market is constantly going up and testing resistance and breaking out above it. But we can see when we tested the low of this trading range from Friday, we found resistance. The market could not break above it. And the statistic held true that, and what I mean by that is today was a trading range day. For me, it's a bear reversal day. If we look at this chart on the daily chart and look at the regular trading hours, the day only session, we know the market opened down here, rallied, and then came back almost all the way down back to the open. So this would look like, let's see if we can find an example on this day. This bar would look something like this bar. So it has a small bull body, small tail below, bigger tail above. The tail would be relatively bigger, but you get the point. Maybe something like this one. So we know it's a type of trading range day. This is not a trend day. We had a channel for the majority of the day, but in a channel, the market spends a lot of time in a trading range. This is a tight trading range here. This is a trading range. Tight trading range here. So we know, and then look, big up, big down. So a lot of the day, when you look back at the end of the day, there's a lot of trading range price action. So again, today was not a trend day. It was a type of trading range day. And for me, I call it a bear reversal day. So we had a relatively small gap down, less than 1%, and the gap was almost right to yesterday's low. The prior day's high and low, typical support and resistance. Also, good to note that most bars are breakout bars. So most days break out above or below the prior day's high or low. So we gap down to yesterday's low. Again, that's Friday's low. And on the first bar of the day, on the regular trading hours session, we broke out below the prior day's low. And we had a failed bear breakout, bull reversal bar. We tried to break below. We failed. We had a bull bar closing above the support and well above it. So support is holding. We try to break below it again. We bounce. Try to break below it a second time. And again, the market rallies, closes above. We try a third time, and the market fails. This is a wedge. We have 3 pushes down. 1, 2, 3 pushes down. So you expect at least 10 bars and 2 legs, sideways, 2 up, if not a reversal. So the market trying to break out repeatedly, in this case 3 times below support, and failing. When it tries to do something repeatedly and fails, it often tries to do the opposite. So here we got a bull breakout, big bull trend bar closing far above the bars to the left. Context was good. We had 3 pushes down, failing to break below support. So a fairly strong bull breakout bar. Big bar means big risk. So rather than traders buying the close stop all the way down here or here, they might wait for a pullback. After big breakout bars and climactic bars, you often get 1 to 3 bars sideways and a pullback. The market decides whether there's going to be continuation or a reversal, and that depends a lot on context and the location of the breakout. But this might be a fresh breakout. Are we clearly late in a bull trend here? No. We had a trading range open. You can tell by the first 2 or 3 bars, bull bar, bear bar, doji, all the bars overlapping, prominent tails. You know it's a trading range open. Limit order market, sellers above, buyers below. But then something changed here on the bull breakout. So I said limit order market, sellers above bars. If you sold above this bear, or I should say buy reversal bar, it has a bear body, but it's a reversal bar controlled by the bulls, closing above the midpoint. Not a particularly strong bar to buy above. So a fairly weak buy signal bar, but context fairly good. But there's an argument to sell above it or sell here or here. If you sold anywhere here, you got trapped on the bull bar. On the close of the bull bar, you're in a losing position. And that creates support below the market. Traders who sold here, here, or here, trapped into a losing position. Traders who did not buy, say they did not buy above here or here, trapped out of a winning position. So that dynamic creates support. When we retest breakout points here or here, the odds are we'll bounce and get a second leg up. So a good looking bear reversal bar, but it could simply be a sell vacuum test of support. You can see we came to these support levels and the market reversed back up. We got a second leg up. Again, through here, lots of overlap. And we started getting lower highs. We have higher lows here. This is a contracting triangle. The market's in breakout mode. And ultimately, we got the bull breakout. So bull breakout above the bear trend line, follow through bar, another follow through bar, a 3-bar micro channel, second leg up likely. First reversal will probably be minor. So this doji bar, it's a bad sell setup. It's against a bull breakout with 3 bars. The signal bar is weak. It's a trading range bar. There's probably buyers below in this context. And with the signal bar being a trading range bar, probably buyers below. And we got buyers below and a second leg up. And then here, you can say on this bar, on the close of this bull bar, the market pulled back. That's one 1, rallied, 2, sold off, 3 or 3. Any one of these touches is 3. A fourth leg up here, we're getting lower lows, higher highs. And then a fifth leg down, that's 3 legs down, 1, 2, 3. So we have a 3 or 4 bar bear micro channel down to a bear channel line and a breakout point. So we're approaching support. So context, not ideal for the bears. Plus, this is about a 50% pullback of the rally. Did the bulls get a good enough second leg up here? Is it 1 pullback, 2? I don't know. Usually there's better symmetry than that. This is a very small second leg. And if this is going to trap the bulls, this might be okay for the bears, but this bull bar was a problem. If you're a bear, like I said, we're going into support at this point. We have the bear channel line, breakout point, 50% pullback of the rally. So a lot of reasons to actually buy here, even though it's a 3 or 4 bar bear micro channel. This should get a second leg down, but selling here is not ideal. So the first sell location might be above this bear bar. Maybe you set a limit order to sell here to capture the second leg down. But when you see this bull bar, that's trouble. And you're disappointed if you're a bear and you got this bull bar, because this bull bar is strong enough to trap traders down here and therefore strong enough to get a second leg. So if you are a bear that sold above this bar, you had another 2 or 3 bars to exit that trade at break even. So the bears failed to get their second leg down. We have trapped traders. The gap stayed open. We did not quite get to the high of this bear bar, and the market reversed back up. So we're getting higher highs and higher lows. This is a bull trend by definition. The problem is that we're starting below the moving average. We're going sideways at the moving average, and we had a big gap down. And you can think about the gap down as a bear breakout. And breakouts usually get second legs, so there's probably resistance somewhere above. But we do not know where yet, where the strong bears will come in and sell. So from here, we got a parabolic wedge. 1, 2, pause, 3 pushes up in a tight bull channel. So this is a breakout. Even on the 5-minute chart, there were no pullbacks. This is a simple leg. There's been no spike breaks. No bar fell below the low of the prior bar here. So even though we have 3 pushes up, you expect a minor reversal and then trend resumption. And that's what we got. We have a minor reversal attempt here, maybe a high 2 bull flag, but failed to go very far. And then here we got 1, 2, 3 legs up. So at this point, we're finding resistance at a bull channel line with lots of overlapping bars. And we have open gaps lower, but through here, all of the overlap, there are not open gaps. And because of that, traders are not getting trapped through here. Bears are not getting trapped through here like they were getting trapped here. So there's less fuel for the market to rally here, and we may have to correct because the bulls might be exhausted. It also could be 3 pushes up from here, 1, 2, or 2, and then 3 up here. So the bulls who bought lower are taking profits. When the market creates new highs in a channel, the bulls take profits. The bears might sell for scalps. And the bulls look instead to buy pullbacks. And so after a correction, we get here, in this case, a 2-legged correction. 3 bar micro channel, pullback, second leg down. We're testing an area where traders were trapped. Even though there's no micro gap, there is a body gap. If you look on a line chart that plots the closes of bars, we'll find a gap. And because of that, we know there are trapped traders in this area. And that means there's support. So you expect a sell-off to at least bounce, if not reverse, in this area. And that's what we got. 2 legs down, 1 pullback, 2, micro double bottom, We went down, up, down, up. And I think this bull bar, it could have been this bear bar, maybe this bull bar, but in this context with this bar, the micro double bottom is really trouble for the bears because now you have two legs down counter to the direction of the overall trend at support. So once you get that bull bar, you might have bears giving up on the close of that bar. And I think that's in part what leads to the bull trend bar. Bulls get aggressive and bears step aside, knowing both bulls and bears think that the market will soon be higher. So the bulls will buy and look to take profits higher. The bears will just step out of the way and step aside. There's one thing Brad always said in his reviews, and he said it in the Systems Academy classes, and he would talk about always in and how it's kind of like the rules of the road. And I was driving one day, maybe a couple of weeks ago now, and I was thinking about that analogy. And I was thinking about how everyone who drives knows about the rules of the road and traffic signals. And if you happen to be at an intersection and there's a red light, you're going to stop because you need to wait for the other cars going the other way to go. Basically, it's their turn. And I kind of see the market as almost like a tennis match or like that game Pong, where it's just back and forth. And the bulls and bears are taking turns with market control and basically having control for legs in either direction. But there are certain times where context lines up where it's actually wiser to be on a certain direction or be on a certain side of a trade. And that's what always in means to me. And I use that traffic analogy because that's how I kind of think about give up bars here. To me, this bull trend bar is a give up bar, and it's bears basically at their red light, and they know they have to stop and stay out of the way while the bulls do their thing. So I think if a trader is short for any reason here, there needs to be a default exit, whether it's above this bull bar or during or on the close of this bull bar. But especially after getting this bull breakout, the market is still, I don't think we ever went always in short. And maybe it was close here, but here, probably not always in short. This, to me, looks like a correction, a minor reversal. And that's another point, too. Is there really a major trend reversal anywhere on this chart? Up until what we've talked about so far. We have a bull trend line here that got tested, but we did not clearly break below it. Bull trend line here broke below it, but we still need a retest. So because of that, I think it was always in long. And this was just one of those situations where bulls and bears agree that the market is soon to be higher. So the bears step aside and the bulls buy aggressively. So this is, to me, at least a minor leg count reset. Leg 1, pull back. Leg 2, pull back, still a minor reversal. Leg 3, good looking micro channel for the bulls, but it's leg 3 and it's nested. So we have 1, 2, 3 legs up and 3 big pushes up. 1, 2, 3. And then we ended up getting a 4th push up here, but still a nested 3rd leg and a 4th leg through here. So dangerous territory to be buying, especially when the market is testing a breakout point. Why did I use this red line and not mark the low of this bar or this bar? I like to use the best fit line, the line that most of the bars touch, and I just used the low close. So it might be that bear bar or this bear bar, but that's why this line is here and not really at any other price, not the low of this bar or this bar. And we can see a really accurate test of that price before a reversal. Now here we got a bear breakout, follow through, more follow through, a 3-bar micro channel, crossing the moving average, breaking below this tight bull trend line. To me, probably always in short on the close of the 3rd bar, maybe the 2nd bar, if you're long for any reason, because it's a late leg and buying here is aggressive and you really need momentum. Once you get any sign of hesitation, like even this bear bar, it might be wise to just exit longs below it or below this bar, certainly on the close or below this bar. And then this kind of goes full circle into day structure. Is this a bull trend day, or is this day going to become a trading range day? We know that because of the market cycle, channels transition into trading ranges. We got 3 big pushes up, and the bulls were exhausted. Bulls taking profits at new highs. They're unwilling to buy until we get a correction. And the bears are getting more aggressive, especially because we're testing basically the breakout point of this gap down. So again, you can think of it as a bear breakout, bull channel. Bull channel is a bear flag because 75% of the time you get the bear breakout of a bull channel. So bear breakout, bull channel, bear flag, and then we got the bear breakout. So always in short, probably certainly a reset of the leg count here. 3, 4, maybe 5 bar micro channel. Is this reversal bar a good buy? Of course not. The context is bad, the signal bar is weak, and that's why the pullback was so shallow. Everything has an opposite, and this is the law of polarity, the law of opposites. So I would argue it's just as important to be able to spot bad trades as it is to be able to spot good trades. Because if you can tell what a bad trade is, then you're also looking at a good trade, because a bad stop order is a good limit order. So we had a bad stop order buy here, and that means it's a good limit order sell. So again, that's why the pullback is so shallow there. There's so much demand for sellers. Traders are trapped up here, and they're looking for any shallow pullback to, if you're a bull, sell out of longs, and if you're a bear, add on to or get into a short position. So we have a tight channel, pull back here, pull back here. You can say it's 3 legs down, 1, 2, 3, but tight channel, so expect a minor reversal and then trend resumption. That's what we got. Minor reversal, we test this breakout point created by this breakout bar, and we found resistance, sellers, and it's the same dynamic as up here. This bear bar traps traders above. If you bought below this bar, you're obviously trapped into a losing trade. If you did not sell, you missed out on the scalp. Both bulls and bears are looking to sell the pullback. And we tested on this bar, we tested again on this bar, we find sellers. Breakout point here, break below it, break far below it, but did not close far below. But this is sort of an intra-bar, or on the same bar, breakout, pullback. Testing this breakout point, and then looks like a give up bar here, breaking below this wedge, and because it's a tight channel, maybe an increased chance we get the bear breakout of the bear channel. In general, that's the lower probability event. Only about 25% of the time that happens, just like up here. It's the low probability event if we got the bull breakout into an even stronger bull trend, but the higher probability event happened. We got the bear breakout of the channel. Here, we're getting the bear breakout of the bear channel. But again, it's a tight channel. And you can see the market's response. This is the channel line. We broke below it. We tested it on the next bar or two. And what was support, the market tested it, bounced, test, bounce, test, bounce. Support became resistance. We broke below it. We test that line again, and it becomes resistance. And we test it and then sell off. We ran out of time, but it looks like we're going close to the open of the day, which is often a magnet on trading range days. Alright, that's going to be it for this review. Thanks everybody, and I'll talk to everybody soon.